In a world that seems more chaotic and distracting than ever, we are desperate to find focus. This conference will be incomplete till we discuss fintech funding, a problem of excess. Please join me in welcoming Sandeep Gupta to moderate this session. Sandeep is the co-founder of Beehive Fund and Beehive Alternatives. He is a CFA charter holder and a CIPM professional. An active volunteer with the CFA Society India, he also serves as a director-elect on the board. Over to you, Sandeep.
India. So a lot of us have heard all day long through the different startup journeys and the different fintechs that are out there. There are more than 1,000 fintechs in India. And all of these fintechs require one thing to start, including my fintech, which is capital. And Nitin comes in at the early stage of the capital. And to introduce Nitin quickly, he brings a decade of experience, especially in global venture capital, having invested in more than 60 tech startups. And these are across multiple geographies as well. He has built, as a founder of First Principles VC, he has built a thesis-driven, just give me a moment. He has built a thesis-driven syndicate and portfolio of 35 plus startups backed by marquee investors. In fact, he is also a very keen investor in Web3 and the blockchain, and he has done a multiple number of investments in this space as well. He was one of the founding team members at Lightbox Ventures and one of the leading customer-focused VCs, which is now of 400 million under management, where he supported 2 funds since inception. So there's a very long CV. Of course, I'd like Nitin to also take it up because it's a pretty long CV, and Nitin is an early executive at Everfi. He started his career as a technology investment banker at UBS in San Francisco. He holds an MBA from the Wharton School and has 2 degrees from the University of Southern California, and he serves on a lot of advisory boards and a lot of things out here, and it's a very illustrious profile, Nitin. Thank you so much for accepting, and over to you now.
I think as you alluded to, we've been very fortunate to work with really great founders in the US and then in India for the last several years. For most of the last 15 years of my career, I've been working with early stage startups, and I've actually just gone earlier and earlier in stage. So I joke about the fact I think I just love more pain. So started at the later stages at Series Bs and Cs in the US, and I'll start touching on some of the fintech investments as well. I think my India journey has been with Lightbox, as you mentioned, and one of our key investments there is Paymate, which I'm sure many of you may have heard of, a pioneer in Indian payments 2007 onwards. They were one of the first to get a prepaid license, one of the first to have a POS product. You know, in 2007, if you were doing digital payments, you were really a pioneer. So Paymate was that, and effectively they became over time the largest B2B focused payments company. So I saw that journey very up close to see that for a long time, B2C was really hard, right, in terms of the fintech and payments sense, because you needed massive volumes, the adoption was still limited. So 2014 onwards, they realized that the pain points in B2B were very big. So they became one of the largest B2B payments companies that I've had the pleasure of working with. After that, in Bangalore, I've been, as you mentioned, First Principles was my own micro VC, and very fortunate to sort of then go earlier and started to have a simple thesis when Jio took off. I realized that one of the constituencies which had not been touched by fintech, despite a lot of effort, was small businesses. Tally was, of course, quite huge. I'm sure many of the folks here are avid users of Tally, but beyond Tally, there was not much, right? So, but when Jio took off, I realized just like with agriculture, suddenly you'll have farmers and small businesses being very easily reachable. So backed Vyapar, which I was one of the first investors in, and Vyapar today is one of the largest SMB-focused finance and accounting software platforms that actually prove that small Indian businesses can pay for software. So I think they were the first Indian company to have probably crossed like 1 or 2 lakh paying users, paying monthly for SaaS, which belied the myth that had existed. Apart from that, another interesting models like Karma Life, which is a young startup that is in the embedded finance space. And this was right when COVID took off. I realized that a lot of the fleets in e-commerce, delivery, etc., would grow. And one of the things that they were trying to provide these massive numbers of gig workers was a better experience around credit. So that became one of the earlier investments. But as you said, a lot of the time I've spent has actually been around the crypto and Web3 side as well. So my view has been to go very early. I don't mind being 1 or 2 years early than most investors. As part of that, I think 2017 onwards probably was the first VC in India to start investing in fintech startups that were serving the crypto economy. So a lot of people were trading Bitcoin from 2013-14 onwards in India. Of course, everybody knows the regulatory problems around that space. But my thesis was that India can be a place where software gets built to support this crypto economy. So just like DeFi will, every part of the fintech stack from payments, lending, insurance, investments, you could have a DeFi, a decentralized version of it. And maybe some of that application, middleware, APIs, these kinds of things could be built out of India. So fortunate to be one of the first investors in companies like Mudrex, which is probably the largest retail-focused crypto platform outside of the large exchanges. So Mudrex simplifies retail investment. So for folks who don't want to have active trading on exchanges, Mudrex is a much more simplified experience to get access to a basket of crypto, depending on what themes you're interested in. And a very interesting company called Onjuno, which is targeting actually the US market. So one of the things that I'm also very excited about is fintech for India is obviously massive, but India as a place to build infrastructure that can go global is even more interesting to me. So Onjuno today is a very, very exciting company that has its entire team, almost except 2 or 3 people, sitting in Bangalore, entire customer base in the US. And not enterprise or SMBs, not B2B, B2C. So actual retail users that they are creating a platform for in the US. So creating a way for people to take part of their payroll in crypto. So earn in crypto is a new concept that they have introduced. So anyway, I could keep talking about
beautiful. So
all these companies that I love so much, but I hope that gives you a bit of a taste.
Absolutely.
And last thing I would say on that is recently the place where we are spending a lot of time is what's happening with ONDC and the India stack, and that's fascinating stuff to me.
Very interesting. So we just had a session on Web3 and crypto and all of that. And before we jump onto that space, which I know is very dear to you, which is where you have invested a lot, a very important question that comes up, even if crypto, of course, Web3 is very futuristic, it's just started, very nascent. But even otherwise, if you look at fintechs otherwise, and since you are an early stage investor, how do you evaluate the valuation of a company, especially in such an early stage? So what is your thesis? How do you go about this?
So I am very lucky that I don't actually face this question. I used to, as a slightly later stage or mid-stage investor. So you look, anybody who tells you that at the first and second stage the company, there is some math that leads to valuation is like lying to you. There is no such thing. At this point with Antler, we invest in people at the concept stage. So we invest in people when they haven't even started the company or written a single line of code. In fact, the earlier the better. So we are very excited. Fintech is about 1/4 of what we do. Actually, if you include Web3, then maybe almost half of what we do is fintech and Web3. And these are areas where we don't mind backing someone very early because we take a 5 to 10 year view. So at the stage that I'm operating today, it's pre-seed. And in fact, if you don't have a team, we still back you. We still invest in you as an individual, and we help you find a co-founder. So at that stage, valuation is very simple. We usually write around $250,000 to $500,000 checks for usually around 10% of the company.
Sure.
So it's a very standard narrow range, right? At pre-seed and seed, the ranges are very narrow. And I think that early data is very meaningless anyway. So somebody says, I'm doing something and I have this much volume, what should be the valuation? Until you've been in it for 2 or 3 years where there is a bit more stability, that early data could be meaningless because you might pivot into something in 6 months. So we don't pay a lot of attention to that. Of course, at slightly later stages, series A's and B's, or what I used to do earlier, then multiples of volume, processing volume and revenue, EBITDA, all of course start to matter. So I'm actually just avoiding your question by saying we don't deal with it.
No, that's very generous of taking only 10% at that stage. So
we are. I do like to think that we have a very good offering for founders.
no, absolutely.
But it's also important at that stage to not crowd the cap table.
Sure, sure. So, of course, you mentioned that payments has been one of the biggest recipients of funding both in India and globally, taking a large share of the total pie of VC capital. But going forward beyond crypto, of course, that is futuristic, in between which are the sectors that you feel are getting a disproportionate pie of the total VC money out there?
So, I think the panel or this session is saying is talking about excess, and some people might disagree, but from my perspective there is no excess. India is still so early in the, if you look at how much digitization has to happen and how much of the offline economy has to move online, that the entire country absorbed about $40 billion of VC money last year. But that was almost 3 or 4x of the year before. So this year it will be lower, and let's just say it will be 20 billion or something, right? That is, venture funding is a drop in the ocean compared to the size of debt markets and equity markets. And India, I always tell people, what excess are we talking about? The average investor in Indian markets has no exposure to tech. I don't consider Infosys to be tech. That's a services company that's past its prime. Or it's a great business, don't get me wrong, but TCS, Infosys, etc. IT services is not tech. So if you look at actual tech, which Nykaa, Zomato, InfoEdge, there are maybe 5 or 6 stocks. So in India, an average HNI or maybe even a family office, etc., maybe 5% of their exposure is to real tech. In advanced markets, that number is 30-40%. So I think that at least 2% going to 20% has to happen. So a lot more money actually has to come in to support the tech startups economy. Now, I am not denying that there is a lot of overvaluation or there are lots of random bad businesses get funded, right? But overall, I don't think that India has an excess of venture capital. Fintech has an excess of venture capital, no. 1 out of every 4 unicorns in the world is a fintech company. So, and if there was some interesting data that was shown about how much money per user fintech companies make. Thank you. If they are successful. So that number, I think FTX is something like $700. Coinbase makes about $250. And neobanks in the US. So there is real monetization in these businesses per user in the US, right? And also that number will obviously be much smaller in India, but these are fantastic businesses. And so there is no excess of fintech funding in general. Now there are pockets which might be overfunded, right? So you have to zoom in. You have to go into details of within payments, is there something that's overfunded? Within lending, I think lending perhaps is one area that strikes me as not overall credit, because that of course India is still very behind the curve on credit to GDP. But fintech startups focused on lending, personally I feel like I struggle with the fact that there is very little differentiation. So I think maybe if I have to pick 1 or 2 areas, I would say the Me Too lending models are overfunded because they're not showing that those businesses can be great standalone venture type businesses. Sure. But overall, if I look at fintech funding across insurance, for example, we are still, I think, very early in the sense of how much capital should be invested.
Sure. So do you think this slowdown, which is a slight slowdown in your opinion, do you think this is a good thing to happen or a bad thing to happen?
I mean, it's, I'm just stunned when people are surprised by the slowdown, because of course it was to happen, right? Like look at the excess of the last, we've had 14 years of up and up. So at some point that had to, I mean, and everybody here is smart enough to understand monetary policy and low interest rates. So I don't think it was not rocket science to imagine that at some point that hyperinflation environment would get created, and of course they would be pulled back. So this is related more to macro, right? It's not related to whether the opportunity in India is not there. Are there problems in India in financial services? Absolutely. Though of course it is the one area where India actually has probably the best stack in the world. So this is the only area I can think of where India actually can compete and be. The fintech stack in India is the best in the world. Absolutely. Right? So that way, but that does not mean that we don't have tons of opportunities to innovate, right? So I think from our perspective, this is super healthy. and it is the best time to start a company. And everybody has heard about this. You know, if you look at economic cycles, recessions are about 10% of time. So if you look at the calendar, you see about 10% of the time in history, recent history, would be recessions. But about 35% of great companies get started in those times. So it's only 10% of time, but 1/3 of companies that are huge billion-dollar plus companies or public companies get started during these times. And it's not rocket science to understand that, I always ask someone, कि इस environment में कौन company start करेगा? Like, who's going to start a company in this environment? Somebody who's great, brave, somebody who's doing it for the right reasons, right? So we are doubling down, tripling down right now. We are super excited because it's not about valuations, right? Some people are like, oh, you must be excited because the valuations are lower. Like, it doesn't matter to me because we invest at the first stage. So that's not the reason to invest more or less. Valuation is the least of my concerns. My point is the people who are starting companies right now are just going to be fantastic entrepreneurs because A, they are not coming into an easy environment. They're not doing this because their money is easy or they can pay themselves a good salary. And the companies they will build, the businesses they will build will have much healthier cost structures. And then I think on the last thing I'll say on this is like when you zoom into fintech specifically and India fintech, and especially some of the areas that I alluded to in terms of India Stack, OCEN, account aggregator, ONDC, crypto, Web3, embedded finance. These are big transitions that will happen anyway. So it doesn't matter if it's a little bit up and down. I think these are big changes, and even if most of these fail, it's okay because the ones that succeed will be so valuable because the opportunities are so big and these markets are so deep that if anybody is thinking of starting a company, I think this is actually a great time to start.
No, absolutely agree, Nitin. So the resilience of companies that are setting up now, the DNA of those companies will be very different versus if the money was just flowing on a tap. But coming back to that thought, since you come from an early stage investment perspective, there is anecdotal news in the market that a lot of the larger VCs coming in later stages, C, D, B, A, are trying to move back a level to ensure that their capital goes a little longer and they are able to deploy in as many opportunities with greater appreciation potential. Is that a fact or is that something that you like to comment on?
No, that's true, and that the later you are, the more quantitative the whole world looks like, right? So to you, then the valuations become more. So then if you're a later stage investor, you're like, oh, why don't I get, there are both arguments. You can get good assets at later stages also. You can go early also and get higher stakes because you can, deploy that capital, like you said, with a longer time frame in mind. Because if you are investing late with the view that in 2 years you have to do an IPO, then you're taking a big risk on the macro. Because of course, I think there are probably some 20, 25 Indian unicorns lining up. They had lined up last year to go public, and now none of them will. So if you're investing at that growth stage pre-IPO, you're taking a bigger bet on macro, and if the next 2 years are hard, then you will lose money. So yes, you probably go earlier in stage, and that always happens. But I think fundamentally there is what at least we do, we believe is so early that most of those VCs will still want to come in at the point where there is some validation, some data. And we are probably a little crazy, so we like to go when there is no validation, because that is actually what venture risk is.
So you come in before the product market fit is actually
before the product is there, before the team is there, right? As I like to say, we think venture capital became all about capital. We want to make it about venture.
Absolutely. So that's a great thought, and that's really encouraging to see the way that companies like yours are taking up ideas to fruition. But what kind of ideas would you back on? Would you back on an idea which has basically the chance to grow very rapidly, or has a chance to make more profits in a significant time frame, in that sense, in a foreseeable time frame?
So good question. I think the short answer is that, and this is a longer separate session for some other day, which is which entrepreneurs or which businesses should go for venture capital and which don't. And I think this is one of the worst badly misunderstood things in India is that a lot of founders think that they must go to venture capital, whereas great companies can be built without venture capital. So if you go down the venture path, there is no escaping two things, size and speed. If you don't have a business that I believe can be $1 billion worth someday, I am not the right person to invest in you. Because my math is a certain kind. That's just how the venture math works. The way venture capital funds are raised, you expect to invest in things which will return 100x, 200x, 1000x multiples, right? Not 2x, 3x, because so many of the companies will fail also. And this is over a long period of time. So you need it to be large, but also to grow from zero to something big relatively fast. So size and speed. Now, which makes it a bad business model for a lot of businesses, including some parts of fintech. So fintech is really interesting because, and Shailendra Singh at Sequoia, who's a great VC, he tweeted this yesterday, and I thought it was quite apt, that in fintech, there is the fin and the tech. The fin part, because here you're dealing with people's money, no matter which part of fintech you're in. And you're dealing with, which means if you're in fintech, right, the way it's different versus, let's say, I don't know, any other random social consumer app, etc., is you're dealing with people's money. So trust is very important. And that means that it takes some time to develop that trust. Secondly, you have to focus on compliance because of the same reason. You're dealing with the public's funds. So the fin part of fintech means that you should not force growth for the sake of it, and you should build it slowly in the right compliant way with good economics and focus on compounding. The tech part of it is the opposite sometimes, because the tech part of it says you should build as fast as possible and get as many users as possible quickly so that you have this network effect or something. So it's a balancing act. If you are not using tech and data in some way and you're just a core financial services business, then that's great, but you're not a venture backable business then, right? And if you're going too crazy on the tech side, then you will run into some issues somewhere or the other, like we've seen, whether it's credit quality, whether it's compliance and regulations. You see that in crypto, whether it's RBI policies on things like what's happening right now with the prepaid cards and BNPL, et cetera, et cetera. So, you have to balance the two.
Absolutely. So the work of a fintech is always, or any tech companies, to push the envelope, as one of the esteemed speakers today spoke. But having said that, like you rightly mentioned, it's also very important to keep economic metrics in place, to have the regulations and all of that also in mind, and the ethics have to be in place, because ultimately it's fin and tech. So finance is also something which has to be respected as well. Earlier in the conversation, you mentioned about certain innovative areas that you have been investing in, which, because of the dearth of time and the number of sessions we didn't have today, one space is ONDC, which we definitely wanted to cover. What is your view on ONDC from an investor's perspective?
So we are very, very intrigued by this. I don't know if most of the audience is, maybe I'll just give a 1-minute summary of, so open network digital commerce is sort of the next thing in the in this India stack, right? So we started with Aadhaar and Jan Dhan, and then we have obviously a lot of things on the health side, the national health stack, and then of course on Aadhaar we've built UPI and account aggregator, OC, and so the fintech stack in India is ridiculously good, right? Other countries are looking at India as a case study, and now moving from sort of the payments and fintech to commerce, because the interesting analogy is that, and I'm not sure about the numbers here, but roughly, let's say, maybe 30-40% of the country is already doing electronic payments. Maybe it's even more now. I don't know the latest numbers. UPI obviously is now bigger than American Express globally. In 2 years, UPI volumes, number of transactions will be bigger than Visa. I mean, just imagine that. UPI will be bigger than Visa globally in terms of the number of transactions. Not the value, of course, because our transaction sizes are small, but volume. And so this part is working well. Let's say 30, 40, 50% of the people are on electronic payments, but only 4 or 5% or maybe 10% of people are on e-commerce. So people have electronic instruments, they have cards or they have UPI, etc. But commerce is still something which many people have not used electronic means for. And so that's what the government or the people who are behind this are trying to bridge. How do you create something in India that will perhaps create a very interesting parallel to what Amazon or Flipkart have built, but in an open source way. So in the ONDC framework, what they want to do is think of any seller or any buyer could be connected directly or through sort of buyer apps or seller apps without having, right now the entire stack is something that, let's say, Amazon or Flipkart controls, right? So what is commerce? You have cataloging, you have logistics, you have payments, you have fulfillment, you have customer service. So right now, as a buyer, you are going to Amazon or Flipkart, and that's who you're relying on to complete your transaction, and that company is managing all the parts of this infrastructure. Now, what if each of them could be unbundled and made open source? So tomorrow, what if you could go on some buyer app for, let's say, toys and be able to buy from any seller anywhere in India, and the parties that are fulfilling this transaction or doing your shipping logistics could also be, it would not be just one party, it could be open for anyone to participate in, right? So I think generally speaking, it's like making all the commerce, the ecosystem more peer-to-peer in a way. So now when you first hear it, you're like, hey, this sounds crazy. Like, you cannot challenge Amazon or Flipkart. You know, this will not work, and there are lots of reasons why it may not. But what if it does? Then you could have just things that we haven't even thought about in terms of how much value could be created. So you could have buyer apps, not one Amazon or Flipkart, but you might have completely new buyer apps come in, where somebody might, like I said, give you an example of toys or children's products in general. You could have different buyer apps for different types of needs. And then you could have seller apps, where these apps are serving sellers and bringing people who are currently not selling online in an easier way. And you could have a lot of infrastructure in the middle also, which could be valuable. So all of this is to say that from a venture perspective, if it works, it could result in many new unicorns. But of course, there are a lot of things to be figured out. It's still very early days. For us, because we go very early, we are very excited, and we will make a number of investments.
Lovely, lovely. So like the UPI today and the Chinese counterpart to UPI is kind of looking to challenge the global MasterCards and Visas of the world. So do you think the ONDC, of course you answered that in your question, could also be looking at challenging a lot of these Amazons of the world as well?
So good question. I think I was careful to not frame it as disrupt Amazon or Flipkart, because that's not, there is enough here for everyone to participate in. So it's not saying that Amazon or Flipkart will be killed. And if ONDC works, they will also participate in various ways. And they may actually get much more value because they will not have to build all the parts of the infrastructure. It's very hard to predict. Sure. Right? It's very hard to predict. It could fail completely. It could turn out that the user experience is very hard. It could turn out to be the case that not as many sellers or buyers are interested in new types of apps. It might be that you need a complete end-to-end platform like Amazon and Flipkart, and that's the way e-commerce should be. I don't know. I'm not someone who can fully predict the future, but I think it's, given what has happened with UPI, it gives you hope that India could see something like this in commerce also. So I think time will tell, but as a venture firm, I think it's very interesting to make some bets.
Lovely. So we are very lucky to have Nitin, who is on the forefront of everything innovative out there. All of those companies would be approaching him for that. Another big trend and hype that is around there is something, of course, which you alluded to earlier as well, which is Web3 and Metaverse and digital avatars and NFTs and that entire world out there. And you would be aware that recently the government of India has also come out with its CBDC. So, how do you see this play out in the current scenario?
CBDC is interesting because I think it will take time, first of all. So even in China, CBDC has been talked about for 3-4 years, and they have a much bigger vision. And this is before the recent geopolitical events. But China's CBDC was actually their attempt to, compete with the dominance of the US dollar. So they wanted to use that CBDC in the Pacific Rim, at least in Asia and all, to make all the trade which is currently dollarized, make that turn to digital yuan. So for them, it was a much more geopolitical angle. We'll see how it goes. I think for India, I don't see it that way. I think we are trying to be far more domestic in its applications and link it to as many existing institutional or retail transactions that currently happen. So the first institutional pilot happened last week, and the retail pilot is supposed to be out in 2 months. And I think initially they're just trying to experiment with sort of settlements between institutional transactions or banks. But I don't think that this will all happen very quickly. I think this could take much longer than people think. Might be 2-3 years out. But does CBDC eliminate the need for crypto? This is my personal opinion. No, it doesn't. And there is a big difference between there's always been this view that blockchain is good, crypto is bad, but that's not the right way to think about it. Most of crypto today is a casino. It is speculative. 95% of cryptos will go to zero. But that doesn't mean that public blockchains or these permissionless things like Ethereum, Solana, etc., won't be very valuable. I think they provide a completely different way for you to build companies, to build projects, and I do believe that the new internet in 5 to 10 years will look like that, will go towards what we call Web3. So even if there's a lot of CBDC, it doesn't eliminate the need for people to build permissionless things globally. And I do personally also believe that the central bank and their concerns are all very valid, but it is not a bad idea to have your population have some exposure to this new emerging asset. So I think, and the point of course, as we all know, is that one of the reasons that people believe in crypto, for example, is that it insulates you from your country's rigid monetary policy or inflation, etc. Right? So, I mean, looking at where dollar and rupee is going, I'm sure a lot of people in this room would not mind having some exposure to something which is not depreciating that badly. So I think for all these reasons, whether it's technology, whether it's some desire for an alternative asset that is protecting your money from your country's depreciation currency or inflation, I think for all these reasons, both will have a space: crypto, public crypto, permissionless blockchains, and also CBDCs.
Absolutely. So the way that we had the blockchain systems which were completely democratized, like Bitcoins and others, and then in between you had the Libra coin by Facebook, which was kind of a consensus mechanism. Now you have the government coming in over there, which is backing and putting out its own coin. So definitely there should be space for everybody, and like you rightly said, there could be an introduction to the general public by utilizing this, understanding the concepts, and then transitioning on to more use cases. So moving on, there is an audience question which I had already asked you in a way, and I am sure this doesn't really apply to you, so we will take it in a more generic way. It's a question from the audience that says, hi Nitin, there's been a lot of discussion that VCs are now shifting focus from growth to profitability. Was unit economics not important earlier, or is it the upward pressure on the cost of funds that has shifted the focus on unit economics? We've already answered this in a way, but the next question is something that I would definitely want you to delve deeper on. Does this hamper the surge of innovation that we have seen earlier?
No, I think the two are. I think it could actually accelerate innovation, because if you are, and to your whoever asked the first question, I think it's not that VCs are not aware of unit economics. I think when the market is flush with money, I think anybody here who has managed money knows that If you have more money that's being thrown at you, you will want to deploy it faster. So it's all sort of top down, right? So the more money coming down towards private equity, throwing money at venture, within venture going to early stage. So it's a trickle down effect. So what was happening was that funds were raising funds faster, funds were deploying those funds faster, and in that in that desire to deploy money, you don't always feel the need to wait for better economics. You take the risk because anyway, like low interest rate environment, capital is a plenty. I think now, of course, that trickle down effect will slow. So there'll be a lagging effect. So thankfully for our stage, because it's a really very, very early, that correction will come, but not immediately. And you know, what's the second question?
Does this hamper the surge of innovation?
Yeah. No, I think it, in fact, if you look at so many of the great companies that I was mentioning earlier, like one of three large successful companies. I mean, if you look at just within fintech, you know, Stripe, Coinbase, I mean, a lot of the neobanks, now I know that it's a weird week to talk about it because they're all having layoffs, but that aside, I mean, these are, like Stripe is a generational company that people believe will be $1 trillion company. So we can argue whether it's in good shape or bad shape, etc., but it's a very, very strong company, right? And all these companies were born after the 2008 recession. So I think innovation is only spurred in these environments because people are pushed to think harder, right? People are pushed to not throw money at the problem because it's harder to raise that money. So, you know, better founders, better economics, better technology. People, one of the things that happens in crazy times is everybody sells a story about tech, but there is no actual tech. A lot of these companies are throwing people at the problem and calling it tech. And they're not actually building very fast in those crazy times. But in these harder times, people will actually build tech because you are going to build for efficiency, right? You cannot just keep raising money and hire people and throw people at the problem. You cannot just say that you've hired more sales and marketing expenses and grow that and show a bigger revenue number. So tech will matter, and then credit quality will matter a lot within fintech. So some fintechs will have a really hard time, but I think when you look at things like embedded finance, when you look at what's going on with earned wage access, I mentioned Karma Life company, right? So the point is that the user today, the average user is using their phone for every single need. And there are still a lot of financial needs where they are not using data and mobile. And it's a matter of time before that also gets solved. So I think there's so much innovation too. I mean, you can look at insurance and think of India just has home, life, life, health, auto, home a little bit. But you look at other advanced markets, there are so many other categories of insurance. And the penetration is so high, right? And you have what's actually metered insurance, right? So pay as you go for insurance. Now that means that data has to be captured in real time. So if any of that has to work in India, we have to develop that. So I mean, just look at electric vehicles. Electric vehicles are going to go from 1%, and we can argue that government estimates are often too optimistic. But when it comes to electric vehicles, a lot of people believe that the government estimates will actually be true. So India will make the transition from 1% EV to, I don't know, maybe like in a decade, 30, 40%. So now you're going to have a complete replacement of the, IC combustion to EV, which means, okay, how will lending happen? How do you know how to underwrite a electric car or electric bike? So just think of all the new things that are coming, right? Which means that innovation will also need to happen around credit, around lending, investing, payments, in all these areas.
Absolutely. So since we are running short of time now, I'll ask a few last questions. So I'm going to ask you a little tough question to answer, but this is more like crystal gazing. So out of the 105 unicorns in India that have grown rapidly to that status and 21 fintechs, how many think will survive this current phase?
I think India has probably 35 actual unicorns. and probably another 20 which are just zombies that should die, and probably the rest of them are overvalued.
Wow.
But if you ask me how many will survive, I think more will survive than you realize. One of the things that's really helping India is geopolitics. We used to have BRICS. I always tell people, what was BRICS? Like Brazil, Russia, India, China. What has happened? Who's putting money in Russia today? No one. Who's putting money in China today? No one. So while India will also have that outflow, India will actually benefit because a lot of the money that would otherwise have stayed in Russia or China is actually going to come to India. So actually, I think that our tech ecosystem will not be hurt as badly. And I hope that's not just my vested interest talking. I hope that's actually true. But I think that it makes sense, right? The world geopolitics has suddenly, in a year, it's starting to look like a very different world where India is, while I don't think we dealt with COVID as well as we think. I don't think our policies are as perfect as but relatively, India is looking very good. So that's what I tell people all day long, like there was BRICS, right? It's just India now. I mean, Brazil is not moving towards a tech economy. It's still very, very commodity dependent. So India will benefit.
So that is very enlightening and pretty interesting to know about the your views on the kind of startups that are out there and the unicorns that are out there. So a rapid fire now. So if I were to tell you different segments of fintech, what is your view of those sectors? Because the topic of today was fintech funding. Is it a problem of excess? And there is a question mark after that. So, and like you rightly said, within those sectors, of course, every sector like insurance also has multiple subsectors. There could be, the payments could be subsectors, but on a broad range, which are the sectors that are overinvested, which are not overinvested? So, for example, say lending. What is your view on lending?
The Me Too fintech models overinvested, but embedded lending underinvested. I think if you look at the non-fintech traditional world, which many of you know much better than I do, one thing that has stood out is in India, lenders who stuck to one product or one type of customer did very well. And people who tried to go into multiple assets usually did not. That is one problem I see with a lot of fintechs have just tried to do many, many things too quickly. So I think, and my problem also is that, you see AU Finance or something, great companies built without sort of being called fintech. They're actually using very good tech today. But a lot of the fintechs that try to do lending, I cannot usually differentiate how one is better than the other. Lending comes down to three things, right? Cost of acquiring, cost of servicing, cost of collections. I usually find very little difference between various players, which makes me think that it's overinvested.
Payments?
Payments, I'm not sure if it's, see, UPI has changed everything. So pre-UPI, you could make the case for underinvestment, or today it's, the B2C is, payments is solved. And on the B2, and there are between sort of players like Razorpay and Pine Labs, BharatPay perhaps, there's some clear winners. B2B, I think is still, Paymate is obviously I'm biased, it's a strong company, but I think there's much more opportunity in B2B payments.
And what about InsurTech?
Lots of opportunity, new products that don't exist today, embedded insurance. And I think the success has come from more full stack, right? Acco, Digit. So if you can have the ability to get licensed and actually manufacture products, that actually seems to be a better play. Because for a long time, Policybazaar and others have done a great job at making money on the distribution part of it. But I think you're seeing more and more that there is maybe a bigger opportunity in manufacturing or co-manufacturing products and having full control of everything from underwriting to distribution, marketing, rather than it being fragmented.
How about wealth tech?
Probably overinvested in the sense, I think everybody's probably heard this already, right? The problem is that everyone's going after the same 2 or 3 crore people who have Demat accounts, right? Now, I actually got this wrong. which is that in the last few years, the growth in the number of demat accounts was actually pretty strong. But that's because a lot of young people came into the markets in 2020 and 21. That seems to be now correcting. I think in a 5-10 year frame, I think there's still a lot of opportunity in wealth tech in India. But short term, I think probably over invested because there's some very strong players. I mean, Zerodha is obviously massive, and you have the likes of Grow, etc., which have grown quite a bit. I think the fact that this always needs media spend is what makes it a bit more less interesting for me. It's just something you need to keep spending money, be on TV, have Amitabh Bachchan or whatever, because if you're in wealth tech, you need to create that trust, right? That's why there is so much TV spending or IPL and all of these kinds of things. So I think not as exciting to me personally as it was some time back.
Sure. Neobanking?
Yeah, look, I think neobanking is just proven to be an experience layer above banks. So I think it's turned out to be overrated. And it also has turned out to be something that has taken longer for people to come out, whether you look at Jupiter, etc. I do think that we will see the emergence of 2 or 3 very large pure neobanks. But I think it's not something that everybody can build. And that's why you see the play with the Jupiter or Navi, etc. I think it requires a certain kind of team that can bring that kind of capital together and that can really scale the entire end to end. Because otherwise, just that, slap on a brand on top of a card and sign up with some bank, and that part I don't think has proven to be as exciting. And I think one of the reasons for that is that in other countries, the core banking experience was so bad that neobanking was a big contrast. In India, I'm not saying that our banks have the best apps. I certainly have my frustrations with my bank, but relatively it's not bad. I think the larger private banks and even some of the public sector banks, have, and I think UPI has also made a big difference, right? Because if so much of your experience is just UPI and your banking apps are working, I mean, I don't know how many people go to a bank branch. Raise your hand if you've been to a bank branch in the last 1 month. Like 2 people. Right? So as it is, it's working fine. So neobanking is not as big of a problem in India as it is in other countries.
Right. So we have a lot of other sub-segments of fintech, but since we've delved on that before as well, and we are totally out of time, but we were very fortunate to have Nitin out here, who's been on the forefront of what's happening at the fintech space. And this session was covering so many topics all across. It's a wealth of knowledge that you have. Thank you so much for that. And yeah.
Thank you.
Over to you, Megha, now. Yeah.
Our bravest and the smartest. This is the key learning of this session and that of the day. If we have more companies getting created from this room in the next few quarters, the credit will go to Nitin. With this, I invite Rinda to hand over the token of appreciation to Nitin and Sandeep. Thank you for that very insightful conversation.